Okay, everybody, we're going to go ahead and get started. A good lesson for today, and we're going to show it to you in multiple forms of funding, and that is how to draw your gun in the Wild Wild West, which may sound a little ridiculous, but many in the space consider alternative finance the Wild Wild West of finance. Right, and it's the frontier. It's still being mapped out, and a lot of it's unregulated to some degree. And in any event, it's commonly referred to as the Wild West. So, if we're all cowboys and cowgirls, and we have a gun on our hip, our gun is the calculator, right? And I think it's a tool in our arsenal that is not commonly used. And if you want to set yourself apart, you should be using that weapon. Okay. So, what does it look like, and what does it sound like? Well, before what we do have for you here is a video presentation. We also have a live presentation, and this is information that you already have access to in the training, which really is the point. You have got to digest the training in full. You cannot digest bits and pieces of it and then just assume what's important and what's not important, because what happens is you are presented with information that you believe are bits and pieces of information, right? And when it comes time to speak with the client and they say millions or hundreds of millions or whatever it is, and they talk about their portfolio, and you think this is a great deal, I'm going to make a ton of money, this is worth my time, and you're not actually doing the math for yourself. You don't know if it makes a good deal. What are the numbers? It's very important that we assess this information. It's also important because let's say we do have a good deal, we do have the right person on the phone. Why should they work with you? What is it that we're going to do and say to separate ourselves from the last broker, right? Very, very important stuff. So anyway, without diving into a bit too much detail here, we'll let the video presentation give you an idea of what we're talking about, and we'll dive into some live examples with real estate investment as well. But what we want you guys to walk away with is the understanding that you should always have your calculator in front of you. You should be working out the numbers for yourself when talking to a client. And the second the math doesn't make sense, you want to let the client know that, hey, if you want this much money, you have to have this much liquidity, this much cash flow, whatever it is. And if the affordability is not there, then it's not a deal and it's not worth your time. And you need to move on, right? So anyway, with that being said, let's take a look at today's presentation. Can everybody see my screen okay?
Yeah, that's good.
Yes.
All right,
Yeah.
terrific. If you need me to pause at any moment, just let me know and I'll pause, okay?
No, stay right there with your eyes closed.
Fair enough. All right, here we go. Hi, everyone. Ryan here, Ion Capital Solutions. Hope you're doing well, and thanks so much for following along. We really appreciate it.
Yeah, no sound.
Ryan,
no sound.
If you'd like to learn more... Geez, I don't know that I'm going to be able to play sound through the call if that's the case.
This was the issue I was talking about earlier that I was having.
Yep. Okay, what we will have to do, I suppose, is link the video after the recording of the call, and you can go back and watch it. If you give me a moment here, I'll pull it up live for you all. So we'll just do that live. So give me just a moment here. Let me stop presenting, and I'll pull it up live. Get the real thing. Okay. Let's go back, present, share. Okay. Are the numbers big enough for everybody to see here?
Yes.
Yeah.
Okay.
Yeah.
Try not to get sucked into the numbers here, okay? Stay with the narration here and just follow along, okay? So the product in particular here is a cash advance, okay? Now, don't get too caught up in which form of funding we're choosing. Instead, just understand what we're doing, how we're doing it, why we're doing it that way. And it's going to give you an idea of how you can utilize your calculator to stay ahead of the client. Okay, so first of all, when calculating, the great thing about a cash advance or a term loan or any cash flow based offer is that it's based on numbers strictly. So you can use a lot of different calculation notes or calculations rather to gather the information you want. Now, the information on the left here displays what we want to talk to the client about, what the client is familiar with, and that's term, funded amount, payback, payment frequency, payment amount, right? And that's us talking turkey, right? Now, forget about the numbers here for a second. Now, on the right-hand side, this is the back-end information we don't want to discuss with the client, not because we want to hide it from them. Okay, they have a calculator. They can do the math for themselves, but you don't want to trip yourself up on the deal. So when you're presenting an offer, right, you take a look at how many points you might be charging, what the factor is, what the sell rate is, right, and then how that translates into a rate percentage. That we need to know that in order to do our calculations. Okay, so some of these calculations might include, how to get the payback, right? Well, we take the funded amount and we multiply it by the sell rate to get our payback amount, right? For those of you that don't know, right, there's 21 business days in the month, right? So if we're calculating our term times 21 business days, we're getting the total number of daily payments, right? If we want our daily payment, we can take the payback amount and divide it by the number of daily payments, right? But this is not the only way to get these numbers. It's some of the ways to get these numbers, right? Another thing you could do is take the payback and divide it by the term, right? So if we had $68,500 and we divided it by 6, right? 6 months, we get our figure, and then we divide that by 21 business days, we know what our daily payment is, right? So it's important to be able to do that. So why? Why am I showing you this? What is the point? This looks like it's mature, right? Hey, we're pitching numbers to a client. If we're pitching numbers to a client, that's, let's back up a little bit, right? I mean, how do we use our calculator in the initial call? Well, let me show you, okay? So before we get to the answer to that question, what I want you to just understand is what this presentation basically looks like, right? And what commonly it might look like. So if, let's say you get an offer from the lender, you want to present it to the client. Usually what they'll do is give you the same funded amount, but they'll break it up over different terms. Now, the 6-month term, the short term, right, is less desirable to the client if they want a lower payment. That payment's going to be high, right? But their interest is going to be lower, right? You can see here, $50,000 paying back $68,500, right? Now, if you go to a longer term, yes, they have a lot less pressure on cash flow. Their payment comes way down, but their interest goes up. They're paying more back on the money, right? And that's because the lender's taking on more risk, right? So that's why you're seeing that, right? Now, first of all, there is no Donald Duck swimming in a pool of gold coins. It just doesn't exist, okay? So it's a large network of syndicators, investors that put their money together and dilute them into deals so that their funds into deals to get their money out the door. They want a shorter term, even with an early payoff discount, or payment discount rather, because if they do that, their money can snowball several times in the year, right? They put their money out the door, they get it back plus interest. They get it right back out the door, they get it back plus interest, and they keep doing that. And if it snowballs 3-4 times in the year, that's a big ROI when you're considering making 37% on your money, 45% on your money, whatever it is. That's why everyone hates a cash advance, but that's why it's so lucrative for those that are pushing the loans, let alone those that are syndicating. But anyway, I'm getting off topic. So with that in mind, why do we want to know this? Why do we want to be able to do the numbers for ourselves? Well, if we talk to a client, right, and our client is not willing to give us our term, our client is not willing to give us our payback, right? We need to be able to do these calculations and take the bits of information that we have to get the what we need. So let's say I talk to the client and I say, hey, what was your loan last time, Mr. Customer? Right? And they say, I don't want to talk to you. I'm tired of listening to you people. You call me all day. I'm not interested. And I just say, listen, all I need is what your funded amount was, what your daily payment was. I'll do the rest. And the client said, I got $8,000. My daily payment was $876. Well, the first thing I need to do is gather the other missing bits of information to know what the client is willing to accept based on what they got the last time. But I can only do that with bits of information. So if I want to gain the client's respect, I got to pull out my calculator. Right now, just so you all know, right, your average sell rate's of 138. 138, 140, what that means is 38 to 40%, whatever it is, right? So that's what I'll use. I want to calculate my payback. So I'm simply going to, right, multiply my funded amount, which is $80,000, by my sell rate, which is a 1.38. And I get a payback of $110,400. Now it's rough. I don't know that he exactly got it, but it's something in the ballpark. Now either the client doesn't know, right, or the client's not willing to provide it, but I'm in the ballpark. I'm in that general arena, right? So I keep going. Well, what's the term? What's the term, right? So I just take that payback and I divide it by my daily payment was $876, and I get 126 payments. That's my total payments. Right? So then I just divide that by 21 because we know there's 21 business days in the month, and I get 6. So my term was 6 months. And so by just doing those little nifty tricks, I'm able to come up with the information I need. So now I know what the client got last time, and I know what he's willing to accept. More importantly, now I know what to do to get the client's interest, right? Or get them interested in the product, rather, or talking to me on the phone, rather, right? So a very useful trick that you can do is just simply double the term. By doubling their term, you can cut their payment down in half. And let me bring this down a little bit more. Right? So what I'll say to the client is, listen, I don't know what you're paying for a daily for in the first place. Right? I would have given you a weekly. Right? And I would have doubled your term. And so if we compare apples to apples, which is something you should often do when you're pitching numbers, is talking about what they got last time versus what they're getting this time and why we're better. Right? But if we compare apples to apples, with me, you're getting a 12-month term instead of a 6-month term. With me, if I was giving you a daily payment, which I wouldn't, but let's say I was, right? You only be paying $438 a day instead of $876 a day. But keep in mind, this is a weekly payment. So instead of spending roughly $4,400 in the week, you're only spending $2,100 with me. That means every other day of the week, you don't have to worry about that daily payment landing in the account and pushing you over into the negative, to the non-sufficient funds, whatever it is. Right? So right away, the client's like, well, that sounds better than what I have. So let's work our selling points for a minute as to why the client should be talking to us in the first place. Well, Mr. Client, I just figured out your loan term and payback with limited information. I just cut your daily payment in half. I just doubled your term. I just freed up $438 a day that you can add to your bottom line. I mean, let's do the math, right? $438 a day times 21 is $9,198, right, in the month. That's $9,198 in savings. In the year, that's $110,000 in savings. Tell me, Mr. Customer, does an additional $110,000 in your annual savings help your bottom line? How much money could your business generate if I loaned you $80,000 on top of it? I mean, I'm syndicating money into these deals, and I'm considering lending you my money. Do I have your attention yet? Does the last loan guy you spoke to sound anything like me? I doubt it. That's how you get the attention of your client. That's how you pull your gun off your hip and do some nifty tricks. And you show them the difference between you and the last guy. You show them why they should work with you and stop working with the original loan broker. You show them better terms and a better route to success because that's what they want. They hate how expensive this product can be. Drives them insane. Right? Drives them insane. But with you, the grass is greener. There's a road to the weekly payment, a road to a longer term, a road to a longer, a lower rate, a road to the monthly payment. And that's what they're looking for, right? But you can't do this stuff if you don't know how to use your calculator, if you don't know how to do the numbers. Now, don't be intimidated, okay? This is very specific to cash flow based offers, term loans, cash advances, okay? And so you've got to be comfortable with this. You got to do it several times over. No worries. I've done it 1,000 times. I could do it in my sleep, and I'm happy to sit down with each and every one of you and show you how to do this, okay? This is available to you. We have offer presentations as well so that you can copy and paste this stuff when presenting to your clients. So no worries, okay? But it's not nearly as complex when doing this with real estate investment funding. It's actually pretty simple. You just need to know how to work your calculator, okay? You just need to know how to work the numbers for yourself. But if any of you have ever been involved in business funding before, you've ever pushed numbers before, you've talked to a client before, and you think that you know what you're doing, right? Or that you figured it out, you got it worked out. Ask yourself, did you do that? Did you know how to work the numbers? Were you able to ascertain what the numbers were with limited information? Were you able to get the client's interest and provide that value they're looking for, dangle that carrot, get them interested to go deeper into the call? Were you using the numbers to your benefit, your calculator? Because if you weren't, it's a losing battle. It's no wonder you likely didn't fund the deal or you didn't win over the client's confidence, because somewhere, somebody out there is doing just that. Okay? Any questions here?
Nope.
I know I just threw a lot at you guys. It may be a little bit intimidating if you're seeing that for the first time. Again, don't be intimidated. It's not always that complicated. It's just to give you an idea of what you can do. Leadership team, do you have anything you want to add to that before we move towards real estate investment funding and what the numbers might look like there?
I think that's kind of forward. I mean, I guess people just have to kind of look at the numbers. I mean, until they, work with a client and see what their actual figures are, you got to deal with the facts at hand.
Right. Absolutely. And so perhaps a bit of a wake-up call into what has to go into this if you really want to separate yourself, and a bit of respect for Christopher, Sebastian, and David and the work they do as team leaders and having to constantly deal with the numbers. So if I'm an affiliate and I'm on David's team and I want David to take care of my deal for me, and I hand David an email address and a phone number, and I say, David, go fund my deal. When's it going to pay? Right? You have to realize, that it's not that simple, that these guys got to work out the numbers. And if the numbers don't line up, if they don't make sense out of the gate, well, you don't have a deal, and you shouldn't have expectations that there is one. Sebastian, do you have something to add?
Oh yeah, of course. Yeah, I've been waiting to say something like this today. It is unbelievable how many people forward me an email, a message, a LinkedIn message, Facebook message, and they give me like a brief little summary of a deal. And they said, "Hey, give me rates, terms, and all the options." And I'm like, "Listen, buddy, I need this, 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 and this, because without this, the proper documentation, I can't really put together a deal for you, especially if it's a commercial deal, if I don't have the facts, the numbers, if I don't even get the addresses sometimes of some of the properties that are being asked for me to give them a term. And without that proper information, I can't do anything." And then the affiliate is like, "Well, the borrower wants to know what kind of range you could do." I'm like, "Listen, I don't even know what kind of deal this really is or how to even put it together if I don't even have a basic application to start with." Because at the end of the day, the lenders are also asking me like, "Hey, Seb, I need this, this, and this. And without this, we're not doing anything." And I'm not going to go to any lender and say, "Hey, listen, give me a proposed rate and term or an option based on this little summary." It's just not going to happen. And after a while, we just start ignoring the messages, because if I can't ask you for the same documentation 10 different times in 10 different ways, there's so many times where I just get those incomplete messages. I don't even get an application, and affiliates are asking me for options. And that's why it's very important up front, get as much data as you can. Everything that I ask for, there's a reason I ask for it. I don't ask it just to, fluff around. But it's all very important. And the more data you could bring us, the easier it is to put together a deal, because it's not always easy. There's always a lot of moving parts, and you have to understand all the moving parts very well to move a deal forward.
Absolutely, absolutely, and some tough love there, everybody. But it's important. This is important stuff. It's important that we're on the same page, that you understand where we're coming from with these bits and pieces. Because once we correct these mistakes, right? Once we bridge the gap with these disconnects, it will be more streamlined. It'll be more smooth for some of you that have yet to fund a deal, right? Because those that are funding deals don't make these mistakes. And that's what stands in between you and success, right? So complete the training. It's extremely important. Complete the training. Listen and learn. Ask questions. Don't just think, oh, I did a little bit of cash advance in the past, or it was simple as, just forwarding getting my application filled out and forwarding to the lender. That's just going to upset your lender with bad data. If you think it's just as simple as just submitting, people says, yes, I want money, and then submitting that to us, and that's going to turn into money for you magically. It's not. That kind of thing doesn't exist. This is not a get rich quick scheme. This is a very real thing that has substance, right? And so you have to put in the time and the work, and it becomes easy. I got to tell you, that little presentation I just put on for you, earned my stripes on a sales floor, embarrassing and humiliating myself in front of people. I mean, it was awful. I had the guys to the left and right of me laughing at me, throwing stuff at me. I had my boss telling me to pitch him in front of everybody, and 5 seconds into the pitch telling me how horrible it was to shut up and sit down. None of you have any of those issues. You're home, you're comfortable, relax. I learned it through repetition, and I just did it, and one day I woke up and I could do it. And I'm no rocket scientist. It's just experience. If you hear myself or Sebastian or Christopher or Gavin or Patrick or David or whoever going over something and it sounds, intimidating or whatever, don't be impressed. It's just experience. It's just experience, something that you can accrue the same way we did and can speak to intelligently the same way we can once you've gathered that experience. It's just about having the patience and the commitment to stick with it and get to the end result to where you can do that exact same thing. And then people will ask you, hey, how did you do that? How do you know that stuff? Ooh, wow. There's nothing really to be wowed about. It's like anything else in life. You put in your time, there you go, right? You get out of it what you put into it, kind of thing. So anyway, how does this translate over into real estate investment funding, right? What does a more simple calculation look like? And what can you do on the phone with your real estate investors to better understand if we have a deal or not? Christopher is going to give you a quick presentation, but before he does, David, do you have something you wanted to add?
Yeah, I got a couple things, and first I want to kind of just piggyback off of what you said. It comes with experience. Be okay with screwing it up. Just like you did, Ryan. I mean, I can't tell you how many times. It's that fear is going to just destroy whatever hopefulness you've got. If you sit there and fear whatever screw up you're going to be, it's just going to put you in a bind. It's just going to tie you up and you're never going to do anything. But if you just kind of be okay with screwing things up, understand that you're going to screw things up, just get through it. Just like everything else, you were, whatever profession you may be in or may have had before, you weren't a professional when you were born. You had to develop those skills. Somebody helped you develop those skills. That's what we're here for. So that's the first thing. And then I just wanted to go right back off of what Sebastian said. Nothing is more frustrating to us than getting just a few tidbits and go, hey, what can we do for them? Like, well, really, we can't do anything until we get an application. So, I mean, we can sit there and discuss things all day long. People ask, what kind of rates can they get? Well, look at the product board. You just go straight to the product board, give them a basic, range of, this to this and ship it out with that. If they're not serious enough to get an application, we're not serious enough to be able to work with them. So, but I mean, we've said it probably 100 times, they've got, the client's got this and this and this. We don't care about the story. We care about the numbers and if they're serious about actually getting funding. So that's what matters. But that's my 2 cents. That's how I want to put it.
Absolutely. No, absolutely. Makes sense. Thanks, David. So anyway, Christopher, I know you have put together some material on this topic for real estate investors, and it's already sitting in the training. So this is a good opportunity, I think, to draw attention to that and to give a live example of what the numbers might look like. So over to you, Christopher.
Gotcha. One moment. Hold on.
You're sharing. We can see.
Yeah, hold on. Let's see if I can.
Oops. I like your background.
Thank
Nice smile.
Yeah, I'm a big anime fan. All right, so if any of you guys have gone through the training, or take time to kind of go back and look at the information that we're updating, we do give you a breakdown on how to look at a standard rehab loan. Now, understand that in your initial conversation, you're not necessarily diving to. There's some variations, but understand the main things you need to know. Purchase price. So in the example here, we have a purchase price of $200,000. We have a rehab budget of $70,000. So what we need to do with those two numbers is add 270, and that gives us our total cost. So total cost in this particular file would be $270,000. The next set of numbers we need to know is what's the ARV, after repair value, because the lender's basing the formula on two ends of the formula, two edges of the deal. What the house will be valued at once it's repaired, and what's your initial cost in getting it right at this moment. And there has to be enough equity, enough spread to make sure that the lender, that the buyer can get out of this property in a healthy fashion and make a profit. And that exit could be either a fix and flip, or they can rent it out and then refinance to retain. So anytime you hear these BRRs and all that other stuff, first things first, before they can get to the R's, they got to get to the buying and rehab. So they have to get the first two processes done. They have to buy, they have to rehab. Once the rehab is completed, then we can look into that calculation to make sure they have enough money to either refinance and rent out and retain. Otherwise, it doesn't work. So next thing we're looking at is what's the approved loan to cost. So in this example, we're using a loan to cost of 85%. So what does that mean? We're going to take the total number of $270,000. Oh, see now, I think I started editing it. I don't want to do that. I'll just leave it at that. We're taking the whole 270. We're going to multiply that by 85% loan to cost, and that gives me my maximum base loan based off the total cost. So anytime you're hearing a deal, you should be taking the sales price plus what their rehab is, and then multiplying that by 85%. It can range 85 to 90, but this gives me the first caption of knowing, well, this deal can support a loan of up to how many dollars. In this case, it's $229,000. Now, once we know what that maximum number is, we have to take that number and we subtract 100% of the rehab, which leaves us our base loan amount. So from the $200,000, we're going to get from the lender $159,000 to make the sale. So in this example, you take the maximum loan divided by the purchase price. We see that we're at 80% of that value. Now, basically, when we work back out the other numbers, when we look at the other side, does the ARV work? Yes, because 229 divided by 350 is 65%. So we know that there's enough profit for the deal. Again, the way we figure out what our down payment is, we take the 200 minus the 159. This deal will require down payment alone $40,500. In addition to that down payment, they still need their customary closing cost. They also need money to start the rehab project. So most lenders require them to have a 10% to start the rehab. They got to start the rehab out of pocket up front, and then they get reimbursed after they complete a certain level of work. They don't get a blank check. They got to do work, and then they get reimbursed for the work that they've done. So they got to show and prove. So when people are, I've had a couple times where people have asked me, well, how come they need so much, why do I need so much money? Because it's not just about the down payment. There's other factors, and you need to be able to explain to your customers the factors that you need to cover, and what the bank's looking for is not only your down payment, but your closing costs, your ability to start the rehab project, and then even the ability to repay the loan back. Because you got to understand that if you don't have any money to pay the loan, then how are you going to pay it? And then that means you can leave a default. So these are all basic elements that go for business funding, real estate, equipment. You got to have enough cash flow to support taking on more debt. If you can't prove that you can support that debt, the lender's not going to give you any more money if you can't show the ability to repay. This is all about how are you going to repay the loan, and you got to show me up front that you have the ability to handle and repay this loan. Now, I'm sure one of you guys is smart enough. You could go ahead and play with Excel and throw these figures in there and come up with your own calculator. It's not my job to make a calculator for you or do a spreadsheet. We're telling you what you need to know. Go ahead and make it work for you. Stop sitting around and waiting for people to do and hand feed you everything, and take the initiative and take the information that's readily available and figure out how to apply it in your business. I think too many times people are sitting back waiting for us to give you the magic sauce. The magic sauce is do the work.
Absolutely. Well said, Christopher. And if I could just pick up off of that, I know me, I learned by doing, right? I was never good at just listening to, when I was in school as a kid, listening to the teacher, and teacher writes the notes on the board, and then I automatically picked up the information. I read through the textbook once, and then suddenly it was just so easy for me. I wasn't like that. I needed to do it. I needed to rewrite it, verbally say it out loud. I needed to do those things. So by you going through this process, by you doing just that, what Christopher said, doing the work, it's going to be ingrained into your brains. And that's when you're going to be capable of doing this stuff on your own. It's a very necessary part of the process. Another thing to understand, and picking up off of what Christopher had said, is that obviously it's the client's job to prove to us that they can afford this stuff. And that's not just what they say to us verbally. If I talk to a business, I'm saying, how much money are you grossing a month? And the business says, oh, I'm doing $400,000 a month. I don't just take him at his word. Oh, okay. Well, in that case, I'm going to give you 400 grand and here you go. Good luck with your business. No, we have to take a look at the bank statements. We need to analyze it. We need to understand whether or not there's actual affordability there, right?
One second, Ryan. I think Miguel might have a question. He raised his hand.
Oh, yeah. Please go ahead, Miguel.
Hey, yeah, sorry about that. Appreciate that. Hey, Chris, when we're talking about the down payment / equity requirement on the field where it has the total amount, is that inclusive with the 10% for the rehab?
No, that's in addition. Wait, hold on. That's in addition. So the down payment is just down payment money. That's what they got to bring to the closing table to buy the property. In addition to your down payment, you have to also have your closing costs and money to start your rehab and money in the bank to make sure you can make your mortgage payments for at least 6 months.
Thank you, sir.
It adds on to it.
All right.
So if anybody's heard me a number of times when I look at a deal, I'm like, all right, do they have about 30% of the deal? So I take the number, whatever the price is and whatever the numbers are, I just go 30% of it. And then I'm like, okay, do you have about that much? If they don't have that much money, I already know we're going to have a problem because they're going to be falling short in one area. Are there exceptions? Yes. If they're a little bit more experienced, they might only need 25%. But if they're brand new, no, you need 33% just to know that you're in the ballpark, because that's what the lender's going to require from you, because you're not a proven entity. With no experience, you are the highest risk possible. I don't know if you can do what you think you can do. So I need to make sure you have money and more money just to be able to handle the process. So, if someone's not talking about 25-30% of the project in cash in hand, it's not a deal. There's no point in somebody showing me, I want to buy a multi-unit property for $500,000 and I got $10,000 in the bank. It's not happening. It's a waste. It's a waste of oxygen at that time. They need 30% down just to buy a commercial property. So this is why, going back to your product board, you should be able to identify this right away. Like, there's no 90% financing for multifamily or commercial properties. It's not there. Seller, Mr. Buyer, do you have at least 30% down? If they're saying no, then you already know that that realistically not a deal. They're looking for a unicorn. And if you keep on spending time chasing unicorns, you're going to be in a perpetual state of brokenness, because we ain't going to find a unicorn. And if we do, who going to believe me? So, and understand that these guys are out there trying to wheel and deal and try to come up with something crafty and out of the blue. No, I don't work out of the blue. I work in the blue. I'm inside the box. Now, will I show you how to do some stuff in the box that's outside of the box? Yes, because I'm a critical thinker, but I'm not chasing the imaginary deal, the imaginary, oh, well, I want to build a retirement community, but I've never built a house in my entire life. No, that's not going to work. And you need to be able to say that sternly, like, look, if you don't have experience in the field that you're doing, you're going to have a hard time getting it. And that's even more so for business financing. Business financing, there's no real money for startups. Startup money is angel investing, using your personal credit,
Assets.
and getting your money that way and building up a reserve.
Wishful
money
thinking.
Money lends to experience, and you need to validate in order to borrow. So with no validation, there's no extra cash flow. So if they're pre-revenue, they need to go do pre-revenue activities, which is utilize their personal credit scores, utilize their friends and family, proof of concept. I mean, if anybody's seen Shark Tank, what does Mark tell you? What's your numbers? Anytime someone's coming near pre-revenue, they're looking at them like, dude, what are you talking about? You're not making money yet. You're not even a real company. You're a hobby. You're an idea. Some ideas pay, but again, they got to do that legwork, and you got to be able to discern that quickly, so that way you're not spending time chasing imaginary deals and getting frustrated.
And to Christopher's point there, some ideas pay. We're not in that business, everybody. So if somebody has a really, really good idea, we're not in the business of determining whether or not that's a good idea and giving them money for it. So keep that in mind. They either prove it through their financial history, through their assets, through their credit, whatever it is, and that's the bottom line, right? We're not going to help a startup. We're not going to help somebody with no experience, and maybe there are exceptions, but for the most part, you want to be dealing with someone experienced. So great points all around there, Christopher, and thank you. But hopefully that gives all of you a good idea of. I'm sorry, Terry. Did you have something you wanted to say?
Can you hear me?
Yes, we can.
Okay. Yeah, I was just looking back on a couple of those things. The first samples you gave, weren't those MCAs you were talking about?
Yes.
Okay, that's what I thought. And when you said you can double the term, are you talking about from like 6 months to 12?
Yes,
or?
correct.
Okay, I understand. And then the next question is the reserves that Christopher is talking about.
Mm-hmm.
I'm just a little confused on that. Okay, so the guy, I understand, the down payment, he has to have 30% on commercial property. That's easy to understand. But on a fix and flip, the reserve has to cover the interest for 6 to 9 months, and you have closing costs, you have various things. And I don't know if you have to carry insurances on these or not. So that's what I wanted to clarify. How much you said? I thought you said 10%, but 10% of what figure? Is that the total loan amount, or how do you arrive at the reserve?
Reserves is 6 months worth of the mortgage interest. So whatever the interest payments on, so let's say it's $900 a month times 6 is your mortgage interest. And how do I get 10% of the rehab budget? Tell me what your rehab budget is. It's 10%.
Well, the rehab was only like $70,000.
So you need $7,000 to start your rehab project, plus your 6 months worth of interest, plus your down payment money, plus your closing costs.
Okay. Are the closing costs, are they low, or?
Closing costs are standard closing costs. That's your origination, your title, your third-party charges, your bank underwriting fee, standard closing costs.
Okay.
All right, Terry. Does that answer all your questions?
Yes.
Terrific.
Just one last one. The
Yeah.
closing costs, would that be like on residential real estate? Similar? Like when you're buying a home, you have closing costs?
Christopher?
I'm sorry, repeat that. I'm sorry. I got phones.
I'm saying, would it be comparable to home real estate, the closing cost? That when you go through a loan, you're going to have closing costs. I expect that's what you're talking about, loan closing costs.
Correct.
Okay, so that's going to be the agents, both sides could be 5-6%.
Right. So this is why I come up with the 30 number, because if you need 10 or 15% down, you need 5 to 6% for closing costs, you need 6 months worth of interest, you need 10% of your rehab budget. I'm usually, if you have 28-30% of the deal, it's going, like the numbers are the same, they're duplicatable. I literally close my eyes. You need about this much money. If you don't have that much money, we're gonna have a problem.
Right. That's how I want to arrive at that figure. Understand that. Okay.
All right, terrific. Let us know if you have any other questions, Terry. And it's important, everybody here. If there are missing bits here, if you're confused, you got to ask questions, just like Terry just did, to be able to piece it together. If you don't, then that's just an obstacle standing between you and where you want to be. So very important.
And just to bring this around, like, understand that companies sell money, and that's pretty much the business we're in. We're selling money, and anything that gets sold has cost. So even if you went out right now and did a personal loan and went online to one of those portals, guess what they have? They have origination fees, they have closing costs, they got wire fees. There's fees associated with any type of transaction. Any financial transaction has relative costs. Money is not given out for free. Money is given out for a cost. And so outside of, say, a credit card, which is a revolving debt, that's why the interest rates are high. But anything that you're borrowing has closing costs associated. So same thing with the MCAs. The MCAs have closing costs. There's still additional fees. So even when a person borrows X amount of dollars, there's closing costs that are going to be associated with it that get taken away from that number. So those are things that happen that are industry wide. So when you're speaking with people who may be unfamiliar, you need to kind of let them know, like, these are standard closing costs. This is nothing out of the new. This is nothing special. This is nothing irregular about what we're doing. We're giving you market standards, and that's how you want to speak about it when you're talking with your clients about it.
And it should be a red flag if they're up in arms about it. It tells you that they either have unrealistic expectations or they don't have all that much experience, right? And you got to be able to catch a bluff. When somebody puts pressure on you and they're giving you a hard time, what they're really saying is, hey, can you make it cheaper? I want to pay less. And you have to know when to stand your ground or not, So, but to bring us full circle, everybody, do not be intimidated by this. It takes time and experience to accrue this knowledge. Again, it takes repetition and trial and error and certainly failure to get to a point where you're comfortable doing this on the fly, live with your calculator in your hand. But make no mistake about it, this is what it looks like and sounds like, and where you want to be to really compete. Right? So if in the past you've tried to do this stuff on your own, or you're considering in the future building your own brokerage or whatever it is, even a franchise of Ion, if you like, you've got to gather this experience and knowledge. In order to be able to compete and to set yourself apart, because those that don't, they can't compete, and that's the reality of the situation. But it's not rocket science. It is not. It's just, you just got to do it. You got to ask questions. You got to make mistakes and pick yourself up and dust yourself off when you fall down and just keep moving forward. And before you know it, you literally can do this stuff in your sleep. It's pretty wild stuff. So any other questions surrounding this topic, around the numbers in particular? Anything we can do for you?
Show me the money.
Indeed, Miguel. Indeed. That's the bottom line. Show me the money. That's what we're saying to our clients. Show me the money, right? They want our money. They got to pass our test. They got to qualify, right? They got to provide the docs we need. They got to show us the affordability, show us the cash flow. If they can do those things, then we'll consider talking to them. So in going out this week and doing your marketing online, consider, is the person I'm talking to right now worth my time? Do they have the cash? Do they have the affordability? Do they have the experience? And if they don't, stop talking to them and go find somebody that is. And if you do that, you're that much closer to the gold. All right. So with that being said, it covers today's topics. Leadership team, is there anything else that we want to add to this? And anybody else, is there any questions around this? Otherwise, we'll wrap up the call.
No, I just think that understand a lot of that information is on the product board, so you could have a high level conversation with your client to gauge their qualifications, and you should be using that. But don't forget that it's not a one-stop close. So gather information and then book another appointment to talk with them. So gather the intel. Like, look, you know what? If I see that you want to get into the finer details of this particular project, let me get some of these numbers. Let me come back. Let me do a little bit of homework, and then I'll be back with you tomorrow, and we can kind of dive into it deeper. So don't think that everything has to be done and you got to be the killer closer and close that day. Utilize the fact that you're going to do your research. You're going to do your homework, and come back to them with something intelligent, that you're not shooting off the hip. I need to verify a few things with you, be it your assets or being the nature of the deal, and then I can give you intelligent, actionable items, opposed to me giving you wishes and prayers, and then you submitting documents, and then I tell you, oh well, I can't do that because it didn't match up. So realize that you have enough information. You know more than most people do. You don't have to. It's not a knowledge test to out knowledge the person on the phone, but it's basically leverage the fact that you have access to additional data and buy yourself time. So don't think that everything has to be done on the spot. Get enough data, get the basics that you need, and then get your information in order, call them back, and now have your talking points ready, armed with, hey, I know how to respond to X, Y, and Z.
Absolutely.
Let me ask a question.
Please.
Yes. Okay. So you're on the phone. You get information, and then you set up a call for the next day. But then how do I align that with the mentor's time schedule? When you're going to get back, and I go over with my mentor, and I have to have his calendar, and maybe he's not available that next day.
You got to ask.
Maybe,
You
but
got to just.
but if you didn't try and look on the calendar to see if you could book an appointment, then how are you ever going to know? There's a bunch of maybes. Maybe I can slip and fall today, but it's unlikely. I don't deal in maybes. If you're doing something, you need to book it. If you need to book a time and you've done the work and have put in the information, you should have feedback with whoever your mentor is. Yeah, this is a viable deal. This is not a viable deal. If it's not a viable deal, I don't need to be on the phone to tell a person it's not viable. That's your job to tell them it's not viable and understand the reasons why. If it's a viable deal and you need additional support, then you go on the calendar and book it. If my calendar is booked at that time, or the person's calendar is booked, hey, you know what? 1:30 don't work, but I see that I have a time available at 3. Does that work for you? And then book the time on the calendar. The calendars are pretty open. You just have to utilize them. It's not about guessing when we are. Go on there, book a time. If it's not there, we'll let you know, and then make the adjustments accordingly.
Yeah, but you have to talk to the client first, and the client's going to ask you. You're going to ask the client, when will you be available? I'd have to know when the client's available. So then,
I think the question that he's asking
This is a really easy fix
how to
here.
actually do it.
This is a really easy fix. If you're on the phone with this client, and as Christopher said, this is a viable situation. In other words, the client has a need and they qualify. Then as you're on the phone with them, you have your coach's calendar open and in front of you. And it's no different than if you were doing it on your own calendar. You wouldn't book a call, blindly without having your own calendar open. So have them both open. Obviously, make sure you know when you're available, and make sure you've got a time that lines up when your coach is available, and suggest the time. Say, hey, Mr. Skicky Boo, I just so happens I've got an availability tomorrow morning at 10 a.m. or would tomorrow afternoon at 2:30 be best for you? So it's that easy.
Yeah. Are you asking, Terry, how do you actually go about doing that? To I think it was Pete's point.
Yeah.
Well, I just thought, I've looked at some of the calendars like Christopher's, and some days he's not available. And that's what I was concerned about, because if you're on the phone and you need him available next day, it's a viable deal. I could, what do you do? Do I call him? Do I email him to go over the deal before? Okay, so I make the decision. Okay, I make the
So, is
decision.
Terry, are we talking about? So, if you did your 9 questions and it looks like a viable deal, then you put in the application, right? Then you're gonna fill out their application. I'm gonna have a quote with you within usually less than 24 hours, right?
Okay.
So, in less than 24 hours, you're gonna have initial numbers, enough numbers that you can have a basic conversation. You know, like understand that the capacity is yours. You're limited by yourself, your own belief. So you're going to have enough details. So even if I schedule another call, hey, I'm going to reach out to you tomorrow with some more numbers on the 24-hour thing. If the deal seems a little bit marginal, you're going to email me the information you gathered thus far, at least, you know, making sure it's a 9. If it falls into the scenario, then it's like, hey, yeah, this is a viable deal. Let's set up another call with them. Even if you set up a call, like, look, I'm just going to call you tomorrow just because it gives you time to collect data. So once you have a little bit of data, then you need to be fluid. You're looking for the bullseye, and it's a moving target. You got to understand how to adjust with what's going on and how it happens. There are a million and one different scenarios, but what I'm saying is, I talked to a person, I got enough information. If there's not enough information to get in the application, I'm still going to set up maybe a call if it's something I don't know about. Maybe it's a program I'm not sure if it falls within the guidelines. You're going to have an opportunity to reach out to someone at that time. You're going to have an answer, and if the answer is worth the phone call, then if it's worth a team member being on your phone call, fine. If it's not, you'll have the information to answer that person. Say, well, you know what? I have my team look at it. It doesn't seem to fit inside of our guidelines because of these reasons. And, you know, maybe on the next deal, you know, think of me on the next deal, and, you know, hopefully we can come up with a better solution for you. So
it makes sense, if I may, Christopher, and to pick up off of that, buy time. Part of this game, and Patrick, I see you want to add something to this, but buy time. You know, if we're busy, and you should be busy, and it's okay to say to the client, you know, that you have a schedule too. If you talk to your client at 6 p.m. and they want to talk to you first thing 8 a.m. tomorrow morning, and then you're not available and they're upset, you know, understand you're a busy person too. Everybody's got their schedule. We're doing plenty of business here over at Ion, right? So we will schedule an appointment when it's appropriate and more readily available, right? And it's okay to communicate that to the client, because let's say we're a bit further into the deal. Let's say that you know, the client, okay, I got my quote, I accepted it. You know, where's the lender? Why isn't the appraisal taking place yet? Why isn't the inspection taking place yet? When are we sitting down at the table? You know, when are we gonna hear back from underwriting? And then we're getting frustrated that they're not meeting timetable. Brokering is a waiting game. It often is a waiting game. You have to buy time with your client. You can do that, but you've got to talk to your own clients. You've got to get in front of them and get on the phone with your own clients. You know, and a lot of the time, you know, you will be having to buy time. It will get uncomfortable at times. That's just broking 101. You know, so definitely something to think about as well. So if you're feeling a bit pressured by your clients, and Terry, this isn't just aimed at you, this is at the whole group and as a general lesson. If you're feeling pressured for time, if you're feeling like that you need to be, you know, immediately give the attention and be available at all times and make sure that we're getting back to them on time, that's not realistic. It's not the way the world works, and it's not necessarily the message you want to be sending to your client either. Yes, we will give you a timely response, but we are busy and we are doing business and making money, and if it's not talking to you, it's talking to somebody else. And so when they do get your time, when they do speak with you, they respect you and they respect your time, right? But if we're on our hands and knees begging and pleading for their approval, they're not going to respect you. And in the end, they're probably going to go with the other broker. So something to think about. Does that make sense, Terry?
Yes. Maybe it's better to say, look, I've got your information. I'll gather it. I'm going to submit it. I'll get back to you tomorrow sometime. Possibly it could be the day after tomorrow, but I will be back to you. I'll be in touch after we run this through, make sure the figures work. Then I'll set up a time with you to call back.
Sounds
Or
great.
if you just, okay, something like that. Okay, great.
Yep, sounds great. That's exactly it, Terry, right? And respect your time. Respect your time and let that client know you're going to do a good job for them and that you'll be back in touch with them with answers, right? What's the point of a premature call when we don't have our ducks in a row yet? Maybe we will. right? But exactly to your point, Terry. That's exactly it. Patrick, did you have something you wanted to add there?
Yeah, just real quick, a couple real quick points. Just first to piggyback what Ryan said, think of yourselves as professionals because that's what you are. Okay, you're not a 7-Eleven, you're not a convenience store where people could just walk in, interrupt your day, and make a transaction. You're a professional, no different than a doctor, an attorney, an accountant. All these people you have to make an appointment with to either talk to or see, right? So think of yourself as a professional. You don't have to be arrogant about it, but your time is money, and you've also got to show that you respected their time as well. So in that conversation, Terry, where you're saying, I'll get back to you, tomorrow or the next day, try as best you can to put a finite time limit on it, because here's why. They are used to hearing those exact same words from any other broker that they've spoken to. Give me the information and I'll get back to you sometime soon. Right? Try to be as finite with that timeline as you possibly can. And again, it just goes back to looking at the schedules ahead of time. You do. I mean, if you see that your coach has open time at 2:00, grab it, man. That's yours. It's first come, first served on these calendars, and treat their calendars no different than you would yours. Hopefully that helps.
Indeed.
Were you going to have a quote available, or are you going to call him back and say, "Oh, this doesn't work, and this is the reason," unless you can come up with more reserve, whatever the issue is.
Right. Exactly. That's exactly it, Terry.
Absolutely. And if you have a quote that you're just not quite sure, how to present it, again, first go to your coach's calendar, find the time that's available, okay, book the call, and then go back to your client and let them know, hey, listen, I've got the information you need. Can we connect tomorrow at 3:00? And,
Sure.
and that way you're just buttoning it down. And again, you want to come across sounding as professional as you possibly can, with an emphasis on your respect for time, yours and theirs.
Absolutely.
Okay.
Now, everybody, it is 1:00 and we've reached the end of the call, but I do want to leave you all with this: is that sometimes you need to be a bit clever with the client on the phone, right? So if you anticipate an obstacle, if you think that the timetable might be elongated for whatever reason, find a way to spin that what can be perceived as a negative into a positive. If I'm talking to Patrick, listen, Patrick, it's probably going to take me another day to get the numbers in front of you, okay? But here's why you want us to take that extra day, right? And by doing that, I'm going to be able to sweeten the pot with X, Y, or Z, or wrap this bell and whistle around it, right? Or I'm bringing in a special guy who specializes and focuses on this region or this type of property or this type of deal, and you absolutely want that kind of attention here. Okay, so give me another 12 hours, and we'll be on the phone. And I'm excited. I'm looking forward to sharing with you. And they go from being frustrated with the timetable to ooh, all right, okay, all right. They're excited. As salespeople, we have got to have that about us, that way about us, because you've got to learn to get comfortable in uncomfortable situations. You've got to learn to turn negatives into positives, to drown out negative information into a sea of positive information. These are necessary skills. So something to think about, but an entirely different topic, and maybe something we'll dive into next week on the coaching call. So anyway, this call is being recorded. Everybody, thank you so much for your time today. We appreciate it. I'll get it posted in the group as soon as I can. All of you have a great week. Good luck on your calls, and let's go make some money.
See you soon.
Thank you.
Thanks, everyone.
See you.
Thank you.